One of the easiest NFP to trade was on last Friday. I mean, day before yesterday. That day was the easiest day to trade because it was a clean buy. His price was trading inside the current dealing range at exactly 50% level. Consider this high and that low is your dealing range. And if you anchor a FIB extension, I'm using unbox settings. You can use FIB too. So fine. If you anchor your FIB extension, you find that price was trading exactly at the 50% of this active dealing range, and the range had the short-term low that gave it more uh, more credits to be used as a liquidity purge. Short-term low, short-term low, right there. And below the short-term low, we had a key level, which was a 4-hour BC, and this is where I was expecting price to trade in and reject this fair value gap. I was very curious to see price inside this imbalance and give expansion higher, attacking these highs, and even this high as well as this one, and if possible that's one. Depends on the differential or difference in previous and the expected in the new data release on NFP. But price didn't came back inside this 4-hour BC. Why? Let me give you a reason on why price didn't came into this imbalance. First, we had our technical fair value gap between this low and that high. If you are studying the ICT concepts nicely, you'll understand this kind of imbalances. The short-term highs and short-term lows, if they don't overlap, they create the thing called technical fair value gap. Here we have a short-term high, and here we have a short-term low. The differential level from this high to this low creates a gap which is termed as technical fair value gap. Let me just call it like that. I don't know how ICT calls it, but I used to call it technical fair value gap. This one is considered as an imbalance where price has to come and rebalance this gap at least at the level 0.25 of the whole range and then expand higher. And our confirmation should be inside the kill zone, as well as we have to make sure we are entering after all the confirmations. Yeah, we have to enter after all the confirmations, or else we have to stay out. You can see here during Asian session, price had a clean consolidation. Price is traded in a small piece of price range without breaking higher or lower. But during London Kilburn Open, price aggressive traded lower into this technical fair value gap, and we left this for BC clean and distracted. After price traded the 50% of the D-ring range and the 50% of the technical favor gap, price started to reject higher. You can clearly see that price tried to push above these highs. They first failed, but during NFP A 830, price dropped and took this low. In form of sell stops, and I used to call this turtle soup. It's an ICT concept. It's just a liquidity sweep. And why didn't I consider this candle as a market structure shift? Is we were already above this high. Why didn't I consider this candle break above this thing high as a market structure shift? I use body to body to consider a market structure shift. You can clearly see that this price or this candle didn't close above the bodies of this short-term high, so I'm still confident with the and I mean I was not confident with this low. Its price was not yet closed above this bodies of the short-term high. It didn't close above it, and NFP came, boom, we went below these lows. Those who trusted this market structure shift, they're all out now. They're suffering the drawdown, and I was waiting for my confirmation to have either balanced price range or to have the thing called what displacement favor gap. Yes, I was about to forget it. And here we have one. This one is a balanced price range. All right, some folks on their platforms, they'll tell you that this imbalance is what we call balanced price range. On my observation and my experience, I will never tell you this kind of inversions to be high probability and to invest on them, because they are sometimes invalidated, maybe because I am not good at them, but I can simply say they are not good for me. Like what happened here, price came and boom, this low, then we pushed higher, we got this balanced price range, and here's where my executions buys with my stops below this low, 25 points. I adjusted them to 20 points because it's an NFP, and target 2 to 3 are just like that. You can see here the stop loss were very big, and my average stop loss are always around 10 to 15 points. But in this case, we're in a high impact news, and the impact news just arrived before our execution, so we have to make sure our stop loss has a great window to give us a room to breathe. That is, it was very easy one, but why didn't I capitalize in this move? If you go check into a 3-hour time frame, you can find that this 5-hour candle closed below this candle, inside or below this short-term low, and gave us a 3-hour CB. This kind of favor gaps are always very potential when looking for London continuation. So I was expecting like, oh, maybe today Asian high is gonna be the high of the day, and we're gonna have a clean TJF back into the range deep. Maybe at level 1.38, 1.38399, and I was waiting if the 5 minute time frame gonna say yes to go. There we got changing state of delivery, no displacement, pushed it higher, then higher and higher and higher and higher. Yes, this one was a clean confirmation that price is now going lower, but I did not capitalize in it because it was exactly at the news release, and I don't like to engage when the news is actively presented. I have to wait for at least 15 minutes and I'll jump in, or else the news has to find me already in a trade. Just like that. So USD was as clean as that. If you could not consider the what? This continuation of London trade. Oh, sorry. Yes, it does.